Imagine if the world's central banks suddenly started buying massive amounts of gold, not small purchases, but record-breaking buying on a global scale. Over the past few years, countries like China, Russia, India, and Turkey have been quietly accumulating thousands of tons of gold. And here's the real question: why are governments suddenly rushing into gold again? Is it protection against inflation, a hedge against geopolitical tensions, or could it signal something much bigger happening in the global financial system? Today, we're breaking down why central banks are hoarding gold, and what it could mean for the future of money. And as always, this video is for informational purposes only and not financial advice. Central banks around the world have been buying gold at the fastest pace in modern history. In recent years, global central banks purchased more than 1,000 tons of gold in a single year, the highest level ever recorded. But that's not a coincidence. For decades after the end of the gold standard in 1971, many countries actually reduced their gold holdings. But now the trend is completely reversed, and instead of selling gold, central banks are aggressively accumulating it. This shift suggests that governments may be preparing for a changing global financial landscape. There are several major reasons why governments are turning back to gold. 1. Protection against currency instability. Gold has historically been seen as a store of value during economic uncertainty. When inflation rises or currencies weaken, gold often becomes more attractive. Many central banks are increasing gold reserves as insurance against currency volatility. 2. Geopolitical tensions. Recent geopolitical conflicts have changed how countries think about financial security. For example, when international sanctions froze parts of Russia's foreign reserves, many governments realized something important. Foreign currency reserves, especially those held in other countries, can potentially be restricted or frozen. Gold, however, is a physical asset that governments fully control. It cannot be frozen by another country. 3. Reducing dependence on the US dollar. For decades, the US dollar has dominated the global financial system. Most international trade, commodities, and financial reserves are still priced in dollars. But some countries are trying to diversify away from heavy dollar reliance. Increasing gold reserves is one way to do that. It gives central banks an asset that is not directly tied to any single country's currency. Several countries have been particularly active in expanding their gold reserves. China has steadily increased its gold holdings in recent years. Some analysts believe China could be building gold reserves as part of a long-term strategy to strengthen the international role of the yuan. Russia, after facing financial sanctions, Russia accelerated its efforts to shift reserves away from Western financial systems. Gold has played a key role in that strategy. India's central bank has also been increasing gold reserves to diversify its foreign exchange holdings. Emerging markets, Many emerging economies are now holding larger gold reserves than before, partly as protection against global financial instability. The big question many economists are now asking is, does this growing demand for gold signal a shift in the global monetary system? Gold used to play a central role in international finance. Before the early 1970s, the US dollar itself was directly linked to gold under the Bretton Woods system. Today, currencies are no longer backed by gold, but the renewed interest in gold reserves suggests that central banks still see it as a critical financial safety asset. Some analysts believe we could be entering a world where gold plays a larger role in financial reserves, countries diversify away from single currency dominance, and global finance becomes more multipolar. Central banks quietly accumulating gold may seem like a small technical change, but in reality, it could reflect a much larger shift happening beneath the surface of the global financial system. Governments are preparing for currency volatility, geopolitical tensions, and an increasingly uncertain economic environment. And gold, despite being one of the oldest forms of money in human history, is once again becoming a strategic financial asset. Whether this trend continues or signals a deeper transformation in global finance is something investors and policymakers around the world are watching very closely. If you found this analysis helpful, consider subscribing for more deep dive breakdowns on global finance, markets, and geopolitics. And let me know in the comments, do you think gold will become more important in the future of the financial system?